Okay, so I'm gonna let's put this here for now. End of January. Currently just doing my monthly recap. Spent a decent amount of time trying to fucking figure out how to export my statement onto an Excel sheet because for some reason it's been a lot more difficult than it was at the end of 2025. So yeah, pretty much it's just going to be me documenting, going through the numbers of trades I took, my P&L for the month. As you can see, we're down 132. I took 14 trades. And out of them, we got 1, 2, 3, 4, 5, 6. 6 wins. So that means what we'll do is we'll do a win rate percent equals how do I format on here? This is the thing, I need to figure out how to fucking format stuff. I don't really know how to use pages still. So if anything, it's a journey on me learning pages as well. Can I just do where's the hash key? Oh my gosh, it's late, I'm being blind. There we go. Times 100. Nope. Do times 10. Okay. Alright, so we're gonna make sure format cell. Drag this a bit closer to here just so it's a bit nicer. So I'm going to do that. Select format cell, date format. Beautiful. That doesn't seem right. Should it be the other way around? That divided by that. That doesn't seem right. I'm being an idiot here, as you can see. Okay, so that is right at the moment. And then we will need, God. All right, you know what? It's going to be fine like that. It's going to be fine like that. So drag that out, add a separate table. Okay, so put that in bold. What the fuck happened there? Right. Win rate percentage is 42% for the month. As you can tell, we started off the month pretty nice. This was, I'm going to drag this out for a little notes tab here. Put me back down there. Chasing bullish move. Unnecessary. but risk management was very tight. Okay, late trade on gold. Initial trade idea was correct, but I got drawn in to the move after reading my book, and price reversed. Emotional trading journal is on channel. Right then. So, followed the model. Pretty much what I want to do with all this, so it was a very, very slow start to the video. What I want to do with all this is, just take note of all the stuff that happened within the month. We'll just do a little summary there. And then at the end of each quarter, I'll do like a quarterly summary. And then at the end of the year, I'll do like a yearly summary. And then I'll get the other spreadsheet up from 2025 and just compare it across that. It's basically with the aim of, keeping a closer eye on the data rather than, just doing a year worth of trading and then only finding out at the end of the year what the mistakes and the learning points were. It's just to be a bit more proactive with it. But yeah, pretty much with this month overall, yeah, we're in the red, but I learned a lot of valuable lessons this month and I'm very pleased with the lessons that I did learn. New model, I'll take that out, AM, BR model implemented, bounce and rejection model noted, PDL, PDH model still in action for higher time frame alignment. Three different models for different market conditions. So that's just one of a few of the things that I've learned this month. I've got multiple different models for different places. My favorite model is the 8 AM break and retest at the moment, and the previous daily low to previous daily high / the other way around is also something to think about whenever it plays out. I have a lot of data on that. Happy with that model. And this month I've mainly just been testing out the 8 AM break and retest in line with, this back testing I did. What have I taken away? What is positive learning points, learnings, that's what I'll do. Put this up here for now and drag this out. No trades on red folder Fridays. No trades on FOMC. Unemployment claims after FOMC are volatile. We also learned one trade max per day. Emotions run high at night when I'm tired. So positives. So we'll do something like this each month. We'll have number of trades, win rate, and you know, we could also do, sorry, I just got a bit of an itch on my shoulder. Could also do a number of like buys, longs to shorts. So we could do longs, do that. We can do shorts. So how many longs we got? 1, 2, 3. So yeah, 2, because this was the same trade. And then 3, 4, 5. Oh. 1, 2. Oh, actually no, that was not. 1, 2, 3, 4, 7. 7 longs. 7 shorts. And then going short. 1, 2, 3, 4, 5, 6, 7, 6. Six of 7. And then longs. Let's go 1. Equals 4, 7. Format. That's wrong, so that should be 3 equals 3 divided by 7. What the fuck? No, should be. What the fuck is going on? Okay, brilliant. So, I guess we're having to do this then. We'll do that. Wins. Wins. 4. Automatic. Why is it 0. Like, do you know what I mean? What? 4. Being an absolute donut. that's going to be a percentage. Okay, better. Now we're getting there. Got insert. Apparently not. Right. Okay. Yes, this is definitely a much longer video. It's literally just the process of me doing this and holding myself accountable. Wins. 1. Can I pop that on the right, please? Okay, it doesn't really matter. So equals that divided by that, pop, so. Okay. I'll put that in. Put that in orange. No, we won't. Put that in green. Okay. So, yeah, like I say, overall, it was a red month, but there were lots of learnings, and towards the end of it, it was actually quite a good month considering what I did learn, and the points I can take away from it. Establishing new rules, found some more out about myself. What else do we have? Found some information on red folder news, when I shouldn't be trading, different types of models that I can implement. A 42% win rate is okay, but it was actually the management of the trades, and the amount that I was losing per trade that was affecting my P&L curve. For example, as well, not for example, but at the end of the month, the last, I think it was Wednesday, Thursday, Friday of last week, I didn't take any trades. We had FOMC, we had unemployment, and I just didn't want to be in the markets. However, the model did actually play out on two of those days. And if we go into where are we going? So that Wednesday we had a 3.24 to 1, and then on the Thursday we could have had a 6.7 to 1. So that's about okay, we're logged in. I thought I was going to bring up my details. Yeah, so with Thursday, spot me there a sec. Rest percent, we did 2% on Thursday. We could have made 830 quid. So that alone would have been fantastic. And then I think this trade here, 2%, 235. So that's about $1,000 there, So, and those are the days I didn't trade just because I said I wasn't going to trade. And although there was setups to take, I told myself I wasn't going to trade, and I didn't. So I stuck to that. On the days, yeah, and didn't trade on the days during the last week of the month. What else we got? from that as well. During that week, circa 1,000 would have been TP, and gold has possibility for trading going forward. I will just need more caution and more data to provide conviction. So as you can see, like it's not much of a spreadsheet, you know, it's very, very simple. It's just like the trades I took, a couple notes, win rate, number of trades, longs, shorts, you know, win rate of each. And, you know, if we look at, say, for example, the actual candle for the month, if we remove that, zoom in a bit, we can see it was a bit of a doji candle in terms of the monthly profile, and on the weekly, we'd been ranging. We'd been ranging during the week, and then we also have a lot of geopolitical tension going on. Commodities have crashed for now. That's not to say that, you know, we still got these zones here. I wouldn't be surprised if we see a reaction off this zone to then come back up and then continue down, or, you know, price just comes off here and is happy to continue the upcycle. Silver has also crashed to it. Well, it came down all the way to a level where I closed my original positions around here. So you can see that's pretty close, but there was a lot of missed gains, but I took risk off. 60% profit is fine. And what else can we say? Current climate, physical gold may be an option for diversification. Yeah. So there is that. And, you know, considering, like I say, the amount that we lost on a month, it's not bad. Got off to, I was on a bit of a shaky business here, and it was just, I think, what we got 1, 2, 3 trades on the same day. 3 trades on the same day that messed up my equity curve. 3 trades on 0901, which have affected my equity curve. Overtrading proving to be dangerous. And again, you see here, 2001, 2 trades, 2 losers. As mentioned in a couple of my earlier videos, from the data that I have on hand, when I take 2 trades in a day, if the first one's a loss, then typically they are losers. Although on the 27th, these are in 2 different sessions. And you can see we've got 1 loss and 1 win, which recouped the loss plus some more, which was nice. It was nice to see that, but noting there was a gap between the 2 trading sessions. Like this one here was in the Asia session at night, right before I was about to go to sleep, and this one here was in the AM session whilst I was at work, like during the afternoon. So there's that as well. I'm actually going to highlight the ones that are on the same day. So if we do, you can see here we got, that's 2 trades there. One. So what we'll do is put them in bold, I think. What's the best way to do this? I don't really know. I suppose we can just, we can just keep an eye. Learnings, multiple trades in one day. Proving to be causes of extra losses. And then the positive we can take from that is what can we take from that? Well, I suppose the 1 trade max per day covers it, I guess, But actually, minimizing average drawdown is key to profitability. And I mean that as in, when you look at the amount that I lose on a trade, these 2 here, big trades, 130 each, both 2% of my account at the time, 6.4k. But from there, the losses on the same day are smaller than what I'm making. That would be smaller. Same day here, bigger trade, smaller trade. I think here on the 13th, bigger trade, smaller trade. That is helping. And yeah, I think this is the majority of it for now. And yeah, it's one of those. I'm just going to keep collecting this every month, and then at the end of the quarter, at the end of March, we'll come back and we'll review all 3 months, and we can review the improvement that I've taken into each of the months. So like at the end of, say it's the end of January, by the end of February, we'll be able to look, I'll be able to look back on all these and see what I've implemented and see if my win rate percentage has gone up. But this is the thing as well, like it may be the case that my win rate percentage drops, but my P&L improves, just from taking, better trades with better executions, maximizing my risk to reward ratio. So it will be interesting to see the difference. Like, also you can see 14 trades. It's quite a lot for a month. That's, if we go with like the whole month for January, like 31 days, that's like just under like a trade every other day. And obviously we have about 20 trading days in a month. So that can be improved. And that just comes from the over trading. And yeah, I think that the main ones will be multiple trades in one day and the over trading continuing to be the causes of extra losses. That's the main one to work on. Just if I take a loss, just be done with it. Just step away for the day. And I've said this in multiple my trade recaps during the month and during last year as well. The over trading becomes dangerous because the psychology gets skewed, and fear of being wrong does creep in a bit, even if you'd like to think it doesn't, or if you try and fight it away. It's just one of those, something to improve on. But yeah, Another takeaway is I do actually have this spreadsheet set up now, so I can just export my monthly statements in, and I have, you know, a summary table to go off each month, something to improve on. And yeah, what I'll do now is I'll just quickly go into the news for this week, Sunday night. We'll just have a quick look, see what we got. So tomorrow we've got PMI at 10. When I say 10, I mean Eastern Standard Time. Job openings on Tuesday. Yep. We got any other big red folder? Non-farm employment change. PMI again. On Wednesday, got New Zealand bank holiday. Monetary policy statement, main refinancing rate. For Europe. Tons of USD news. Nothing at the moment. And then Friday is no trading. Obviously, as mentioned multiple times, red folder on Friday. I'm not touching it. Simple, simple, simple. What we'll also do is the US government still shut down. Partial shutdown. So, Congress failed to approve the 2026 budget before the midnight deadline. Negotiations broke down between the Department of Homeland Security, Immigration, Senate passed, revised spending package, House is in recess, couldn't vote. Okie doke. Department of Defense, Homeland Security, Transportation, Housing, Urban Development, Health and Human Services, and Education. Nutrition Assistance Program is not affected. Okie doke. Expected duration, shutdown to be brief, potentially ending once the House votes. Okay. I know that was very, very brief and a very, very quick summary, but just so I have like an idea of the types of departments that are possibly not going to be active. Will this affect financial news drivers? And will it provide any delays? Durable goods, retail sales, jolts, GDP releases, data not delayed. Nice, 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 nice. FOMC meetings. We also have a new Fed chair as well. Jerome Powell is no longer there. I can't remember the guy's name. I think it's Kevin Walsh. What is Fed market volatility? If key data gets delayed, more reactive fee, lack of US data, thinner catalyst, choppy or low conviction price action, fine. Some of those trade intradays means less structured direction moves, more fake outs, more reliance on technicals and order flow. Yeah, fine. Okay. New Fed chair. his policies. Kevin Walsh, right. New Fed Chair nominee. Okay, so that ends in May, so we don't really need to worry about that at the moment. Fine. Historically a hawk. Higher rates, fight inflation. Shifted dovish. Sliding with Trump's calls for rate cuts to support growth. Push more rules-based, discipline Fed, more market-sensitive, less toleration. Yeah, fine. Okie doke. So that's something we don't really need to worry about until May. Jerome Powell will still be active until then. So we've got a good few months. We've got Q1 unaffected and a little bit of Q2. So yeah, like I say, got a nice little summary, gone over the news, potential ways the price is going to react. We've got a fresh month to trade in, lots of data to collect, and looking forward to this month. I've got a good feeling about it. With what I've learned this month or in January, I've got good reason to believe that next month will be blue. We'll be back up. So either way, I think that's going to cover it for me now. It's 12. So I'm going to get some rest, and I'll be back with a market recap tomorrow.